What if I told you that by investing just $200 a month, you could become a millionaire? Would you believe me? Probably not. But it's true. And by the end of this video, I'll show you the exact numbers, the estimated timeline, and a simple plan to get there. So watch until the end, because step 3 is what 90% of people miss. Let's break one of the biggest myths first. You don't need a high salary or a trust fund to become a millionaire. You only need 3 things: time, consistency, investing through the right accounts. And almost every W-2 employee has access to these. Most people simply don't know how to use them effectively. Let's look at the numbers. If you invest just $200 every month and earn a long-term average annual return of around 10%, similar to the historical performance of the S&P 500, here's what could happen. After 10 years, about $41,000. After 20 years, about $150,000. After 30 years, more than $450,000. After 35 to 38 years, over $1 million. Notice something important. The first 20 years seem slow, but during the last 10 to 15 years, your money grows dramatically. That's the power of compound growth. Even Warren Buffett accumulated most of his wealth after the age of 50 because time, not the amount invested, is the biggest advantage. Display a simple graph. X-axis equals years. Y-axis equals portfolio value, with the curve rising sharply near the end. Now let's talk about where your money should go. I'm not recommending any specific stock or fund because your investments should match your personal goals and risk tolerance. However, many investors in the US follow a structure like this. Build an emergency fund covering 3 to 6 months of expenses in a high-yield savings account. Contribute enough to your 401k to receive your employer's full matching contribution. It's essentially free money. Then consider a Roth IRA or Traditional IRA, which offer valuable tax advantages. For long-term investing, many people choose low-cost index funds that track the S&P 500. And finally, diversify. Don't put all your money into one stock or one sector. This is general educational information, not personalized financial advice. Consider speaking with a licensed financial advisor or CPA for advice tailored to your situation. Here are the 3 biggest mistakes people make. Starting too late, skipping the employer match and leaving free money on the table, selling investments during market downturns. Panic selling interrupts the power of compounding. Staying invested for the long term is usually the better strategy. Here's the bottom line. $1 million isn't a fantasy, it's math. Time plus consistency plus tax-advantaged investing equals long-term wealth. If you found this video helpful, save it and share it with someone who always says, "I'll start tomorrow." And let me know in the comments. At what age are you starting your investing journey? I'll see you in the next video.